Hi, you're watching ET Markets Live. I'm Neha Vashisht Mahajan. Welcome to a brand new episode of ET Market Wrap, where we discuss what happened this week along with what's going to happen next week, along with the outlook. Joining me today is Mr. Kranti Vatini, equity strategist at WealthWills Securities. Thank you so much, Mr. Kranti, for taking out time and joining us today on ET Markets Live.
Thank you, Neha. Thanks for inviting me on your show to share my market views with you and with all the viewers of ET Markets.
Well, the pleasure is all mine. So let's quickly start our session for today. Let's start with what happened in the markets this week. This week we saw the markets in somewhat range bound situation, flattish, yet some small correction was there. And you also suggested last week in our ET market wrap only that the markets could be in a range bound situation for this week, and we saw that. So, what's your view on the current week and what factors affected the markets this week?
Yeah, Neha, as you mentioned, the markets are in a consolidation phase right now. They're trading very tightly. But as long as the good thing is market could able to sustain the range of 25,000 level for Nifty in the medium to short term, that can be uh, gives the positive direction for the market in the medium to short term. Uh, Even though we are in a consolidation phase right now, the direction of the market and the mood of the market is in a positive zone at this point of time. What we can sense at this point of time, there are some kind of a global uncertainty in the form of trade negotiations that are going on. So at this point of time, markets are in a wait and watch mode. Both the foreign portfolio investors and the DIs have been in a wait and watch mode right now. Uh, India and US, the trade deal can come at any point of time. We need to wait and watch for the final blueprint for that trade deal. And there are some kind of a of uncertainty around the trade deals between US and Japan and US and
Hmm.
China, because these are the very strong trading partners for US, and also they controls the majority of weightage for MSCI Asia Index Asian markets are concerned. So some kind of a uncertainty over there. The President Trump comments with respect to the US Japan trade deal is concerned, it's quite surprising to the market. In fact, he used the word he's getting frustrated with the Japanese counterparts and trade deal is concerned. So that also created some kind of a uncertainty in the Asian markets are concerned. So because of these uncertainty at a global level, and some kind of a consolidation that is taking place at this point of time, we are about to enter into the earning season. So because of these events that are taking place, markets are in a subdued mood at this point of time. That's the reason markets are in a consolidation phase right now.
All right. Mr. Kranti, the markets could be in the consolidation phase for maybe next few weeks or so. Nobody can predict the markets, but we can talk about the sectors that could be in the bullish mode for the next few months, which is a long time. So, which sectors do you think could be bullish due to macro factors and other things?
One thing is the sectoral outlook is concerned, Neha. The defense, which has been going up in the recent past, yesterday the government of India have declared around defense procurement of around more than 1 lakh crores. That can be a positive for the defense stocks. And in fact, today, if you observe, defense is outperforming majority of the stocks in the defense index. It can be large cap, mid cap stocks have been outperforming. So
Hmm.
defense looks very attractive at this point of time, given the kind of a strong order book inflow and also kind of earning visibility defense segment is offering. And within the defense space, there are new segments are emerging at this point of time, like the drones and also aviation and defense uh, fighter aviation is concerned. So these are the themes looks interesting to me at this point of time. So one need to check for the stock specific action with respect to defense is concerned. By and large, as we are entering into the earnings season,
Hmm.
how the each sectorial earnings season is going to be. We're having a very strong monsoon. The monsoon has been quite good It's progressing very well throughout India. So the rural consumption can be one of the theme one need to keep in mind. The urban consumption also very important. We can expect some kind of a GST cuts also one some kind of news is there. So the consumption theme is going to be one of the key interesting area. But in the consumption also there seems to be some kind of a divergence is building up at this point of time. A lot of regional players are entering into the consumption space, which are not reflecting truly in the markets at this point of time. But the consumption theme is going on well, and the banking and NBFC space is concerned, financial services space is concerned. It looks very attractive to me at this point of time. They had a small mild consolidation in the recent past, but if the investor is a really long-term investor who have a horizon of 3 to 5 years, definitely banking
Hmm.
stock can be added at this point of time. It can be PSUs, it can be the private sector, large cap banks are concerned.
Okay. And are there any sectors you would suggest to avoid right now, especially for retail investors who are new to the markets or don't want to take too much of risk?
At this point of time, Neha, we are at a, you can say, pivotal point at this point of time. The export oriented sectors like IT and also the pharma are concerned at this point of time. How the implications of this entire episode of trade deal is concerned, it's taking twists and turns. One day we are getting a different news, the other day the scenario is completely getting changed. So, medium to short term, I'm quite neutral about IT. In medium to short term, and pharma and medium to short term, quite neutral about both these sectors. So I'm looking forward for the sectors which are by and large the domestic theme is concerned, which runs purely based on the Indian macros and Indian consumption theory is concerned. Those are the sectors I'm quite bullish. But the companies, the sectors which are more primarily depend upon the global theme is concerned, global growth is concerned, the US is concerned. That's where the concerning area at this point of time. Day by day, the uncertainty is going up in the global macros are concerned. That's where I'm a little bit wary in terms of the medium to short term outlook of these sectors are concerned. If we can get some kind of a strong specific domestic theme in these sectors, like the data center theme in India is emerging in a strong way. This is the theme subsegment of IT one can keep on their radar, because the data center theme is going to emerge in a strong way in the coming quarters. So those kind of themes are subsets of IT which are based purely on domestic centric nature. We are looking forward. In terms of the large cap bellwether IT companies are concerned, the US growth worries, US rate cut, and how the looming uncertainty around US economy. That's where
Yeah.
I'm a little bit concerned in the medium to short term. If the investors are a longer term in nature, who have a horizon more than 3 years, if there is any dip in IT for longer term, one can do the cherry picking, because the valuations are at the long term averages at this point of time. So any dip, one can try to accumulate. The large cap bellwether IT companies are concerned.
All right. So let's also talk a little bit more about financials. Do you think financials is a good place to bet on right now? You mentioned that financials can be one space where investors can look at, but what are the factors that they should look at before investing in any, financial or PSU, NBFC stock? And should they only go for large caps, or there is scope in small caps also, small and mid caps?
Neha, with respect to the financials are concerned, these stocks have been in a consolidation phase, and the recent rate cut, which have given a comfortable liquidity for these financial institutions, which gives the stronger credit growth for the large cap banks. Okay, it can be both in terms of the public sector as well as private sector institutions are concerned. And if the inflation cools up further, if you are getting one more kind of a rate cycle in the coming quarters, so that can give big booster for these financial services banks and NBFCs are concerned. The credit growth has to take some more pace if the credit growth is taking some more pace, the consumption theme is going to get enlarged in the next coming quarters. So that gives a strong order book, a strong book for the financial institutions. And also the private sector credit growth is expected to expand further. One way we're talking about the GDP, doubling the GDP in the next coming decade. So we need a ample expansion both in terms of the private capex is concerned and the government capex is concerned. And to develop the infrastructure, the credit growth is needed at a strong pace. So to support those growth engines, the credit expansion is much needed. And whenever the credit expansion that takes place in the economy, okay, the banks and financial institutions are going to take the advantage. Okay, they can emerge as the key beneficiaries. So that is the reason the mid and the uh, banking and financial services stocks looks attractive. It all depends upon the investor appetite where to chip in. Depends upon the time horizon and their risk appetite is concerned. One can chip into the public sector or private sector. It can be the large cap and mid cap. There is a variety of themes are available at this point of time. Depends upon the individual investors risk appetite and time horizon. They can chip into these individual stocks.
All right. So before moving to the outlook and Nifty levels, let's also briefly talk about defense stocks. Now we know that defense stocks rally today as the DAC, that is the Defense Acquisition Council, cleared the capital acquisition proposals worth over 1 lakh crore rupees, like you mentioned. So how is it looking for the sector right now, and what are your expectations from the Indian defense sector and stocks?
The defense sector is by and large right now, we have the public sector players and the private sector players also emerging. And within the defense space, uh, there are certain themes which can be sustainable in nature. And at this point of time, given the kind of valuations are concerned, defense stocks are not cheap. They are fairly valued at this point of time. But given the kind of order book visibility and earning visibility on a longer term basis, these stocks are attractive to the investor. So any kind of knee-jerk reaction that do comes in the market, any dip in the stocks, one can try to accumulate these stocks. Okay, it can be private as well as the public sector defense themes are concerned. So and also the government is focusing on. Earlier we were the net importers of defense. Now, right now, this year we are targeting around 25,000 crores of defense exports. And also, Prime Minister Modi is traveling to different African countries to build up the bond with these countries. So these kind of countries are Indian defense, Indian railways, okay, can be the export-oriented source in the coming future. So if we have a strong trade relationship with these nations, okay, they can be the importers of Indian defense are concerned. So we can expect some kind of a strong order book visibility for the defense companies. And also over a period of time, definitely our capabilities are recently proven and it's demonstrated to the world. So when compared to the pricing is concerned, when compared to the West, Indian are cost sensitive. So even the Western countries also can look forward to outsource Indian defense manufacturing theme is concerned. So it's going to emerge over a period of time. So that is the reason if there is any dip in these defense stocks, it looks attractive to me.
All right. Let's now discuss about the outlook for next week along with Nifty levels. What's your view on the next week's Nifty performance?
Yeah, we have big news that are going to come in the next week. The trade deal, okay, it can give a knee-jerk reaction to the markets also. How the entire, because it is a synchronized deal, the news are going to be expected. By and large, we can expect a favorable deal with respect to India and US trade deal is concerned. So as long as Nifty could able to hold on to the level of 25,300, that is the support zone I am looking forward in the medium to short term. And also we are entering into the earning season. If the earning season is starts with a good note, then we can see Nifty rallying further. So these are the levels, 25,300 on Nifty, and that the higher node we need to look at 25,750, 780. That is the range we need to look forward. If market could able to decisively move above that range, we can see some more rally on cards on for the market.
All right. Well, this marks the end of our segment for today. Thank you so much, Mr. Kranti, for joining us today on ET Markets Live, only on ET Market Track.
Always my pleasure, Neha, to share my views with you and with all the viewers of ET Markets. Thank you.